My name is Gerald Panneton. I'm the Chairman and CEO of Terra Resources Corporation. We are actively drilling, or preparing for drilling, I should say, on our project in the Northwest Territory, mainly concentrated in the town of Yellowknife. We have already outlined roughly 1.8 million ounces combined resource of indicated and inferred on our project. And most recently, we completed a deep program that basically was very successful by technically outlining the continuation of the Campbell Shear 600 meters below the mine. We are now focusing in the historical estimate resource that we have outlined a very good potential. The Con Mine is an asset that is very important to the company because it has a mining lease, surface rights, which is a shortcut towards putting back the mine into production.
Well, good to see you, Gerald. I wanted to catch up. You put some, thoughts out with regards to kind of drill targeting and preparation, etc. But I want to kind of start on the corporate side of things, because obviously gold price is going on a bit of a rip, and I think some companies are thinking differently about how they position themselves strategically. For instance, you've obviously had a Cisco's $2 million in here. I mean, how does that, for instance, change or affect your exploration budget?
I think the OR royalty, because they changed the name, OR royalty, which owns which had a first right on the royalty on the whole project of Yellowknife that was signed way back in 2013. But at the end of the day, without going into detail, this is an endorsement to our project. Who would put $2 million if you don't believe in the project? So very simple, OR as giving us the thumbs up. We started talking about the exercise of the NSR some time ago. They did an in-depth technical review. Gerald is saying the right thing about the potential of Yellowknife. Is he going to find 5 million ounces? Is the Con Mine valuable? Is the Con Mine can generate 1, 2, 3, 4 million ounces? The potential is there. The only thing that stops us from realizing it earlier or sooner, it's the money supply. And now that money supply may be changing. The endorsement from a Cisco is already big. Not a Cisco, but OR royalty is very big. It's an endorsement to the value of the project. And of course, if they want to go to 3%, they have to write another check for $2 million, which is again a second endorsement. And I'm pretty sure they will. Our path forward is very, very straight. When people look at our presentation, there's a timeline page. If we succeed in drilling what we need to drill over the next 6 to 12 months, we'll have an updated resources, we'll have a PEA right after, and I think we'll be able to materialize the Con Mine acquisition from Newmont.
Well, I mean, just to that, right? Obviously, with gold over like 3,600 bucks at the moment, there's lots of companies, like I said, who look at the economics differently, and get after the resource differently. You've got some milestones you've got to hit in terms of like Newmont option agreements. So, how does the gold price change your ability to kind of get after the 1.5 million ounce target that you?
It's a very good point, Matthew. Look, I signed the deal in November 2021 after 18 months of negotiation. Gold was $1,600 an ounce. This morning it's $3,750. Okay, so think about the difference. The mine shut down in 2003 when gold was $340 an ounce. That's a 10-bagger. Think about that. Valuation cutoff grade used back in 2002 was 10 gram cutoff grade to make the mine profitable and survive at $340 an ounce. 20 years later, it's not one time or twice the cost. The cutoff grade can be lower. How much can it be lower? This is an internal and an external reviewer decision. But we've already had a meeting last week because a lot of people are coming out with new resource, changing their cutoff grade. We see all kind of thing. we know exactly how low we can go to make it successful. The current cutoff grade we've used for underground mining is 3.5 gram in the 2022 September resource. Can we lower it down? Most likely, yes. 3.5 gram basically is valued at $500-$600 cutoff grade per ton. So when we look at underground mining or open pit, we have a minimum cost to take that ton out of the ground or out of the pit. We call it the mining cutoff grade. What makes sense to have the ore sitting on surface, whether it's an open pit or an underground, is the key. Look, a tremendous gold price. Is it going to go higher? I don't predict gold price. I'm very happy about the current situation because I believe in gold. I've been involved in gold for 40 years plus, and I'm not going to change my mind about the value of gold against the rest of the world.
Well, let's remind people, perhaps haven't looked at this story for a while, the con mine versus other kind of Canadian high-grade underground development stories. I mean, are there any analogues in Val d'Or or, such as Kirkland Lake, etc.? What would you point to?
We used, I would say that 3-4 years ago, we used to have a cutoff grade of $200 a ton. 150. I've seen $150 per ton to 200. You have to move with the cost of operating, the cost of building, and the cost of everything. I mean, post 2021 COVID years, inflation went up 20%, 40%. But Yellowknife, like Val d'Or, Timmins, and other camp, has a tremendous value in its people. It's a mining town. The diamond mines are shutting down in Northwest Territory over the next 3 to 5 years. A lot of skilled worker from underground mining in the Northwest Territory will be looking for a job. Our timing cannot be better to have a project in Yellowknife.
But okay, fine. But I'm just trying to, and I'm sticking with the kind of the non-drilling stuff for now. Look, you've got a few as you kind of go through that analysis around cutoff dates and cutoff grades, etc. Then that's fantastic. But what are the other things that you've got going for you? Obviously, this is a brownfield site. What infrastructure advantages do you have?
When I decided to join the Terra X Minerals, we changed the name to Gold Terra 6 years ago. It's been a while. I have not lost any of my belief and my trust that this project has a lot to yield. The intrinsic value of everything that Gold Terra owns in Yellowknife is amazing. It can realize so much more with better money supply, which was not there for a long time. All the money. Look, we always say that the generalists are always the last people coming to the party, investing into the gold sector. They're not in the gold sector yet. Well, what if gold price goes over $4,000 or clinch $5,000 an ounce? These projects, it takes a long time. The biggest advantage Gold Terra has is with the con mine as a cornerstone property is that with the mining lease and the surface rights, and similar to my Detour story, how do you think I built Detour from IPO to gold pour in 6 years? Come on. How do you think I did that? So did I skip permitting? No. I had a shortcut permitting because I was sitting on a mining lease with surface rights. I had to refile a new mine plan, a new environmental impact assessment, but local, because I already had. I was not trying to take some crown land and get surface right. So the con mine is very cornerstone. And everybody can look at the page in the presentation. You can see the con mine has a lot of nice, good infrastructure in place. But the mining lease and the surface right allows you to possibly shortcut the permitting process from a normal project, which is 10 to 15 years, down to 1 year. So that's an advantage that not too many people in Canada have.
Okay. Well, okay. Let's again. I want to get back into looking forward in terms of how you go about drilling this out. But I think it's important to kind of look back in. Like I think May you put out a release about hole 56A. In terms of that wedge hole, what was the kind of technical interpretation, I guess, and more importantly, how does it kind of form your drill planning going forward?
What drove the deep drilling? So you sign a deal to purchase 100% of a property that has great potential, in my mind. Shut down at the time where gold price was 340 by Myanmar, purchased by Newmont in 2008. Newmont wants to make sure that when we purchase the property, we will not give it back to them. It will not come back to them. So I need to assure Newmont, the government, that we have a solid project. So we set the bar at 1.5 million ounces when gold was 1,600. We still want to reach that 1.5 million ounces because it makes the project bigger or better. But in today's world, at today's gold price, maybe a good million ounces is enough. It's 10 years of production. You look at, a million ounces, and you look at, if we spend $300 million to build a mine, say, because we already have a site that saves us a lot of money, and you find a million ounces, that's $300 an ounce. So it's not too bad in an environment of $3,750 an ounce, right? You have to look at that per ratio. How much ounces do you need to find to put this mine back in production safely and be able to put the environmental bond and raise all the money and convince everybody that it's a good project that will succeed. So you need ounces. But look, we already found 540,000 ounces near surface between 200 meters vertical and 500 meters vertical. So we already have the startup of the mine with that Yellorex area, about a kilometer south of the mine. That can be reached via a ramp. We don't need the current mining infrastructures. So we can just access that zone via the ramp. What is the value of 500,000 ounces at 5,000 Canadian gold? It's 2 billion. Don't tell me that it cannot be done even with 500,000 ounces at today's gold price. So the value is there. 500,000 ounces alone at 3.5 gram cutoff grade. Actually, and if you change the cutoff grade because it's in the 42-101, that 540,000 ounces at a 2.5 cutoff grade, which is on the table, is 700,000 ounces. So we can talk 700,000 ounces today if you want, at 5-6 gram instead of 7-8. 5-6 gram on the ground at this gold price. 5 gram is worth I don't have my rule of thumb very quickly, but I think it's $120 US a gram. So 5 gram is worth $600 US. $600 US a ton is very valuable, especially from surface.
Now, so obviously, I think we've seen a few companies actually sort of look at that model of how do we get to revenue quicker, and let's not worry about total size. It's just get revenue flowing, anti-dilutory behavior. You can pay for future drilling if you can do that. So you're saying the weighting of near surface versus deep exploration it makes sense to go for this, yeah?
I went deep because I needed to provide enough information to show that the zone, the Campbell Shear, was extending at depth below the mine working. But this is not the most economic way. The most economic way is stay within surface or within mine infrastructure. There's no question about that. However, back in the negotiation that they did 5 years ago, we put a threshold of 1.5 million ounces at gold price of 1,600. So I think there's room there. Okay, I'm not going to go into detail, but that's what pushed our deep drilling. And I always said that the historical resource is valuable. I'm going to keep that as a back pocket. And I was trying to achieve 1.5 million ounces plus 600 of historical resources. That will give me a 2 million ounces project. That was always been my thinking up to my challenging deep drilling expensive experience. But we prove that the Campbell Shear is there 600 meters below the mine. But internally, in myself, in my thinking, I've always known that I will not be going underground at 2,500 meters vertical for the next 10 to 15 years. Because what I have at surface, 500,000 ounces, give you 6 years of operation, year 1 to year 6. And by the time you develop and dewater the mine and set up some drill station, what do you do next? So 7 to 12 will be what I'm going to be doing this winter.
Right.
And the deep potential is always there. This mine, if we succeed in putting it back in production, will be in operation for the next 15 to 20 years.
Okay. So how do you go about then planning this drilling in terms of whether they be step outs, whether they be infill, or how do we get to those?
There's both of them. This winter,
okay.
we're planning to go back to Yellorex to bring more ounces into the indicated. We have some very follow-up zone. I think the potential of my zone at the 2.5 gram cutoff grade is maybe 1 million ounces close to surface. Now, the zone we're talking about in the press release of early September and the one coming in the near term, we'll talk more about our program on the northern extension of the Campbell Shear, which has an amazing potential. We've already did our internal calculation of the resource. Without expanding it to too much, there is a 1.4 kilometers strike length between 500 and 800 meters vertical. It's not deep. That needs to be drilled. And it's has a great potential to be maybe also at least 500,000 ounces potential. So we're not very far from having the solid project that needs to be presented to Newmont to finalize the purchase of the Con mine. And I think if we have the support and the financial tools to drill as much as we can be materializing this acquisition in 2026, a year ahead of our 2027 deadline, which can always be extended if need to be.
Right, because what you've got ahead of you is like all of these high grade projects of this nature is potentially structural complexities which you need to understand with folding and multiple shears and so forth. But you've got to show Newmont something, you've got to show the market something, and you're going to have to be super efficient with the money that you've got available to do the drilling, to say this thing can be economic in the model that you've just outlined. So in terms of that planning, are there going to be easier ounces than others to identify? And is that what you're focused on?
Well, you always do. That's why we started 4 or 5 years ago, right on the south of the mine, in that sector of 0 to 700 meters vertical. I mean, at the end of the day, there's potential for up to 1 million ounces there, which is 10 years of production. In this environment with the gold price, the financial needs to be, and that's the same reason, by doing an updated resources followed by a PEA, properly done. A PEA basically is the structure of your PFS or feasibility study. This is basically your line by line of what I need to do, and this is the optionality. For example, we're looking at direct shipping ore. It's going to be in the PEA. Are we going to do direct shipping ore? That's a different question and answer. But we're still going to have the option. A feasibility study is to be looking at making sure you look at all the options and you take the best economic option. But in this environment of gold price, I mean, it's unbelievable. Look,
it's unbelievable. But you've also said something earlier about maybe some mines like coming towards the end of their lifespan. The government obviously will want to. Hopefully, provincial government want to incentivize programs like yourself. Are there incentive grants available to you?
A little bit, but it's the Northwest Territory is like is a very small province. Right. The total population of the Northwest Territory is 50,000 people. 20,000 people live in Yellowknife. It's basically a subsidy from the federal government. But I think with our government that seems to be promoting development, First Nation promoting good development as well, I think we will have all the support. And the diamond mines shutting down over the next 5 years will also help replace all those jobs. So I think it's a plus for Yellowknife to see the Con mine being purchased and put back in production.
Okay. And do you, just coming back to kind of efficiency of drilling and so forth, obviously there's a bunch of sort of untested gaps along the kind of Campbell Shear as well. Is that sort of secondary to what you've just explained. We need these cheap, quick answers. Yeah.
The con mine is cornerstone. Let's get over 1 million ounces as close as possible to 1.5 or 2 as soon as possible and realize this acquisition. Nobody is giving me a penny of valuation for what we own or we can own with the con mine. The moment we realize the acquisition and we close the deal of the purchase of the con mine, we will be a different company with a different market cap because we will own these ounces. We will own the site. We don't own con mine. We have 0% in it. I think it's very important the market to understand that. And I think the market actually is maybe putting me down because of that. But think about it, if the moment I have 1 million ounces in the con mine in a permitted site, how much those ounces are worth? I told you it will cost $300 an ounce to build. So what should be the value of what we've been able to find and prove on the con mine with a permitted mining lease surface rights access right in town with all the infrastructures nearby? I think people should pay attention to Gold Terra a lot more than they've been. If they don't like it, it's their choice. But there's no question in my mind. I have put money through this tough time. We did 3 financing at 5 cents. The company thrived. Now we have endorsement with OR royalty. And I think we're going to get further and further and be a very good investment for many investors over the next couple of years. It's time to buy.
I think time to buy. It's this phased approach. I think makes a lot of sense, and certainly in this gold price environment.
We also have $3 million in the bank.
Yeah, but you got to spend that on drilling, right? And that's what people are
I understand. In. I understand we need to spend drilling, but we can also be very smart about it, and less dilutive than we've been over the last 3 financing.
Yeah. Yeah. Okay. Well, like I say, endorsement from OR and obviously a kind of clearer plan about how you get after this. And I think gold price is doing you and a lot of people a lot of favors. Now it's your chance to take advantage of this. So,
yes, of course. Yeah. Don't miss the opportunity to be aggressively drilling your target because they're a very good target.
There we go. It's simple. It's simple.
Very much.
Gerald, I appreciate the update. I'm glad that this is opening up for you. This opportunity is opening up in front of you. Now's your chance to kind of grasp it, and we look forward to speaking to you again soon. Thank you.
Yes, look forward to it, Matthew, and thank you very much for your time.